softer market, but like you said, it's been pretty quiet here this morning. What's going on?
Yeah, had the big rally in soybeans yesterday, and then we just can't find any follow through this morning. We've got new contract lows in wheat now down 20 some cents, and we're getting close to putting contract lows in the Kansas City contract along with Chicago. There's real conflict in the U.S. and the European weather models for the plains for next week. There's some kind of an agreement that the soft red wheat areas, Illinois, Indiana, parts of Missouri, could get some heavy rain, but the rest of the Corn Belt looks fairly dry. But some models are throwing some rain in there. When you look at what's happening in the Black Sea wheat region, better rain chances and maybe kind of an end to the conflict between Russia and Ukraine may open the door for some shipments to be sent out without the expensive insurance, and a little bit safer passage of some of this product may lead to more movement of world products, not only wheat, but also U.S. corn in the world markets. So we're seeing kind of a double-edged pressure from improving weather conditions, improving freight cost, and improving passageway for the wheat and corn on a worldwide basis, weighing on both wheat and corn. It's going to be hard, I think, with Monday's report, likely to show a big increase in corn acres. Going to be hard to rally that corn market much of anything unless there's a bullish surprise there.
Yeah. What would that bullish surprise be?
Yeah, it would have to be something less than the 94.4 million acres that the trade is expecting. And I don't know. I think it's going to be actually more than that. I think it could be 95 million. We've only planted 95 million or more twice in history in 2012 and 2013. But I have a feeling this year it's going to be the third year that we do that. We're going to plant more than 95 million. You look at the insurance guarantees, there's about a 4-cent better price than what we had a year ago for corn, but it's $1 cheaper for soybeans. That doesn't bode well for putting a lot of soybeans in the ground. And if you're not planting corn, I'm not sure what else there is profitable for you to plant. A lot of producers moving out of cotton into corn, moving away from soybeans to corn. Just not sure unless there's some small specialty crop, what else there is other than corn that would allow you some profit opportunities this year.
How about livestock? What's going on there?
Well, we saw the big rally in the cattle yesterday, and still haven't heard anything as far as cash trade developing. That cash market should come in at higher money. The thing that really impressed me about the cattle market this week was the fact that we increased the slaughter considerably, 45,000 head from last year, and yet the cutout values are held in there very well. That tells me that there's still strong consumer demand. And as long as that consumer's out there, I don't know that there's a reason that we would have significant top in the market. Yes, we could have corrections, and we probably will. But for the most part, this cattle market just remains kind of a bull market, with the second quarter expected to see even tighter supplies than we saw in the first quarter. So little setback here. Not real surprising after big gains yesterday and no cash trade to show for it. But obviously the trend remains to the upside yet for this cattle.
All right. Anything else we need to be talking about?
I wish there was. There just isn't that much fresh news. The hog and pig report came out yesterday. That was well below expectations, so a bullish surprise there. And we saw, at least initially, a rally in the hog market, but we're starting to give some of those gains back already.
Yeah. All right. Thanks much, Brian. Appreciate it.
Yeah, you bet. Have a great weekend. Thanks, Randy.